everyone. This is Ying. I have my partner Amanda here. Today, we're going to talk about 2024, how the year ends for San Francisco. But Amanda, let's talk about the country a little bit. The
Sure.
real estate market for the entire country, because you follow up with all the news. What do you think?
Well, I think it's really interesting kind of what has been going on in the market nationally and then more locally in the Bay Area. But in 2024, nationwide, we saw the fewest transactions in the real estate market since 1995. So this is a long time. In the Bay Area, we only slightly beat out 2023 in terms of total number of transactions.
Mhm.
What I think is really interesting is in 1995, we had about 1 million less real estate agents working on the same number of transactions.
That just means more competition, right?
Yeah.
I mean, there are millions of agents out there, as you know, as I know.
A lot of it has to do with the fact that, there's a very low bar for entry in real estate, as we know. And a lot of people think, oh, I'll just go in and do it part-time. And, so it's not their main source of income. So that inflates the number overall. However, as we also know, especially with the complications of NAR settlement and all the new documents just in general and how long the contract has become and all the forms, you can't do this job part-time and really truly understand the breadth of information you need to.
It's not an easy job. But let me roll back a little bit on transaction volume for the city of San Francisco. Our market is different from the nationwide market. It's a very small market. So historically, when we look at the trend, here we're looking at the transaction volume now. From 2014 to 2024, our total number of transactions is anywhere between 5,000 and 5,500, as a ballpark number. In 2021, it went up to over 7,000 transactions.
That's a huge difference in transactions. And we know why that was, right?
Why?
Well, it was, there was so much movement going on during the pandemic. That was still during the pandemic.
Yeah.
And then also interest rates, dropped to the lowest that they've ever been.
2 to 3%.
2020,
right?
beginning of 2021. Yeah.
So there were a lot of movements. Lots of condos and TICs were sold in San Francisco in 2021. Also single families as well also went up. In 2022, we're kind of back to the normal range.
Around the 550.
Yeah, 5273 is the exact number. But 2023, we took a major hit in terms of transaction volume. It went down to 3873, compared to like 5500. It's a major drop in the 2023. And in 2024, we are back up, relatively speaking. So in 2024, we have over 4,000 transactions, 4247, which is still quite a bit lower than our historical average.
And the historical average is 52, 53.
Yeah, 52.
Like
yeah, we can calculate, but something like that. So we are at 4,247 for 2024. So overall, the market is recovering. Right, Amanda, isn't
definitely. I think we saw a nice reduction in mortgage rates towards the end of 2024, and that did spur extra activity in the market. I think a lot of people are anticipating that those rates would go down more. I knew a lot of mortgage brokers who were talking about end of first or second quarter rates going in the fives. I don't think we're going to see that. I don't think anybody's saying that anymore.
Not anymore.
Somewhere, hovering between 6 and 7.
6 and 7 is where
for most of the year is the prediction now.
Right. Later on, we're going to share the interest rate chart with you a little bit. We're going to, just talk about that a little more. But long term, I think for San Francisco market, we are recovering in transaction volume and we're recovering in price somewhat as well. And we want to talk about that right now with you. So we started with single family homes. Single family home is still a very important component in the San Francisco market, probably 40%, I would say, in terms of transactions. So the chart you're looking at is a single family median price 2020 to 2024 comparison. We did a 5 year, so you can look at our median price uh, differences trending for the 5 years. So in 2020, we are looking at just about 1.6 million. It went up in 2021 due to COVID effect. Single families were very popular, so it's 1.8 million. Then dropped a little in 2022, and you see in 2023
Dropped quite a bit.
Quite a bit. What happened in 2023, Amanda?
Interest rates went through the roof, the highest spike that we've ever seen in history.
In 2023, you can definitely see the drop in our market to 1.55. And then in 2024, you will see a slight improvement year over year, to just about 1.6.
And depending on if you're a seller or a buyer, you'll look at that as an improvement or...
Correct. So I guess, it's good for a buyer, right? Wouldn't that be your conclusion on that?
The price is going down.
Right.
Yes, would be good for a buyer. However, with the increased interest rates, they're still paying a larger amount on their monthly.
Correct. So you either pay a lower price, higher interest, or you pay a higher price, lower interest. So, it's all part of the equation. Then the next chart, we have a single family price per square feet. Same 5 years. It's pretty much the same trend.
Mm-hmm.
We go from 981 to just a little over 1,000 and go down to 997 in 2024. Anything you want to add?
No, I think the chart kind of spells it out. And yes, the price per square foot and median price kind of go hand in hand, which is what you would expect.
And another interesting fact I want to mention is back when we started in real estate, the price per square foot for each neighborhood was quite different. I remember the discrepancy was much bigger. But now if you look at San Francisco, the price per square foot is getting closer and closer among different neighborhoods. So that's something very interesting to observe. Do you know why?
I don't know. I always think things fall right around 1,000 a square foot these days, kind of.
Yeah.
But if you look at Pacific Heights or Noe Valley, you're looking at easily 1,200 a square foot, 1,500 depending.
I think maybe the reason is because we're looking at median. When you look at each individual house, there's a huge discrepancy.
Yeah. And that's why I don't use average in San Francisco, because you've got something that's 2,500 a square foot, and then you've got something that's 500 a square foot. If you average those out, your number makes no sense.
I think that might be the reason, because we have more transactions.
Yeah. Well, we have, and the properties in San Francisco vary so greatly, and there's just different types of property. There's things that are complete fixers. There are things that are totally brand new construction. There's just a big difference in the quality level and the cost of properties.
Very good point. So basically, the numbers we're showing you here is just really a reference point, give you an indicator of how the market is doing. Mm-hmm. It's not what you use to go assess the value of a property, a particular property.
Right. You can't just take that number and apply it to any house in the neighborhood or any house in San Francisco.
Well, yeah. That's why we have a job, right? Because it takes so much to figure it out.
Yep.
So the next one, moving on to condos. It's a similar chart, just to give you a different view. This is a condo and TIC. We combine the condo and TICs together just because they are similar type of properties. Amanda, if you want to just tell our listeners again who are not familiar with TICs, what they are.
Sure. TIC is tenants in common, and it's a type of ownership that is prevalent in San Francisco because of the cost of living that this was developed. It's for multi-unit buildings that have not condo converted. And when you own a TIC, you own a percentage of the entire building rather than owning the airspace within the unit as its own thing. And AndySerkin.com is a great place to go if you want to learn more about TICs, because there are all kinds of things about them. And the other thing about TICs is with lending, you get what's called a fractional loan. It used to be you had to be on the loan as a percentage owner with anybody else who owned in that building, which obviously carries its own confusing and disturbing situations.
Yeah.
So now we don't have that anymore. And it used to be that TIC loans were much higher interest rate, at least a point, and you couldn't get a 30-year fixed. Now that's not so much the case. I'm hearing actually in some cases you get a better interest rate and you can actually get a 30-year fixed. So something to consider for people who are looking, in a lower price range.
Yeah, in terms of value, TICs are generally cheaper than condos.
15%, would you say?
10 to 15% easily. I mean, obviously, it depends on the property,
Right.
but I would say at least 10 to 15% cheaper than condos. So that's good for people who are looking for more of a value.
Yeah, tight budget.
Right. And I mean, obviously, there are some drawbacks of TICs, and that's where you should go read more about TICs.
Yeah, and whether if it's a building that is condo convertible or isn't, makes a huge difference in what the value of that would be.
Absolutely. Which we were covering at a different session with you. What kind of buildings or what kind of units can be condo converted. That's a very
complex. And that may change in the near future or not.
Yes. All right. So look at our numbers. Same 5 years, 2020 to 2024. The median price was 1150 in 2020, went up in 2021, dropped in 2022. So very similar to single family home, but it kind of went flat last 3 years. Right now we're just below $1.1 million for a condo. And this is like a 2-bedroom condo, basically, you're looking at. And then price per square foot, it's almost same as a single family, just right about 1,000. And again, it depends on the neighborhood.
Condos are lagging behind single family homes, which they tend to do
Yeah.
in terms of overall price and also recovery.
Absolutely. And condo, it takes a lot longer for condo market to recover. At the beginning of 2025, we do see some signs of recovery.
Yeah, it seems like there's increased interest. I mean, our inventory in the beginning of 2025 is still very low. I think, it's always after the Super Bowl, right? That's when everything's going to hit. Next weekend's the Super Bowl. So time will tell. But we do see a lot of coming soon properties and a lot of buyer activity.
Yeah, that's awesome. Then we're moving on to transaction volume. We covered this a little bit just now as we were talking about long-term trend. But right now, we're going to just talk about Q4 a little bit. What did the fourth quarter of 2024 look like in comparison to the previous 5 years?
And I think this is so interesting, this particular graph that you've got, because if you look at 2020 and you look at 2021, there's a huge difference in transaction volume to 2022, 2024. And you see that little bit of recovery happening in 2024. But what I think is super interesting is during the pandemic, one of the big things that we saw was that all the usual, summer and winter are the times when we have lower transactions, just went out the window. The norms for seasonality
completely gone.
And so, because usually, fourth quarter tends to be a quieter quarter, right?
Right. But I think the 2 years are different, though. I want to talk about 2020 and 2021.
Sure.
2020, first half of the year, we didn't have much, right? So it was really, all the transactions were squeezed in the second half of the year. That's why you see such a large number.
Right.
For the full year, it's not that different as we talked about earlier.
Right.
But 2021, it's just an overall high transaction year for the whole city.
Busy.
Right? So that's where you're looking at it. Then 2023, if you remember, we just talked about 2023 being a very, very low year. But, seems like a Q4 2023 isn't so bad. So maybe Q3 was a quarter got hit harder than Q4. Q4, a lot of inventories got absorbed in Q4.
Yeah.
And then
now we're seeing some recovery.
Yeah, so healthy recovery. So that's a transaction volume for Q4. And the next chart, we just have a full year transaction. Same thing we just talked about. We had huge spike in 2021 and a huge drop in 2023. And now we are slowly going back up.
That's right.
Yeah.
And we are anticipating that trend to continue.
Yeah.
I think if we talk real quickly about the interest rates, and then we can kind of discuss predictions.
Yeah, let's do that.
Ideas.
So the next chart, we have a 30-year fixed mortgage rate according to bank rate. So that's interest rate for the 5 years. Again, same time period.
Yeah. So as we know, we hit the low in 2021 on the market. Now, these are just looking at kind of a moment in time, basically the beginning of February of
Correct.
these years. And then the recently seen one is just from today, basically.
It's over 7.
Yeah, it's over 7 in general, though I have heard of some bankers who are getting lower than 7 right now. So that's definitely a possibility. It depends on a lot of different factors. But I think, we did see the high at 8%, which is not on this chart because that particular data point time isn't on here.
Yeah.
So we're not at the highest point ever. We did recently, about a month ago, see some increases.
Yeah.
I think very recently in this past week, we saw a little bit of a decrease. And I don't think anybody's anticipating any huge decreases in the interest rate.
Yeah.
But maybe little ones here and there, I'm talking to my clients about expecting the rate to hover somewhere between 6 and 7 for most of the year.
I think that's fair. And for people who have been waiting, sitting on the sidelines, thinking interest rate is going to drop this year, it's unlikely to make a big impact.
Yeah. I mean, we don't have any crystal balls, but, talking to all the people in the different parts of the industry that we know, this is kind of our educated guess how things will go.
So far, all the predictions have been wrong. So,
yeah.
just so you know, that's what forecast means.
So who knows? So I think, then there's the other things that are more gut feelings that don't show up on charts or graphs or anything like that. And I think, in terms of my business, I'm getting lots of phone calls from prospective buyers who are looking to dip their toe into the market.
Yep.
Maybe not ready to start throwing out offers, but they're thinking about, that this may be the year that they want to buy. So I've noticed a lot of that.
That's good.
I've noticed a lot of places going on to coming soon. So I do anticipate that within the next few weeks, we'll have a good deal more inventory that's being publicly marketed.
Yeah.
What about you? What are your sense?
Well, I think this year the market started early. We were talking about seasonality earlier, right? San Francisco market generally has a very strong seasonality. And in the beginning of the year, generally there's just no inventory at all. This year, we still have low inventory, but I would say most people are pushing their houses on the market earlier than the.
I think people are pushing their houses on the market earlier. However, there's still not as many.
No, they're not many.
So it's like if someone has a listing,
Yes.
they're getting it out there faster.
Correct.
But the total amount of listings is still very low and I think the biggest reason for that is those people who have those low interest rates.
Yeah.
They're just, unless they have to move, they don't want to sell right now and move somewhere else where they have to pay a higher interest rate unless they're a cash buyer.
Yeah, well, unless they have to move, people are not moving.
Right, if they have to, yeah.
Right. I mean, that's where we see the biggest drop in our inventories or their transaction volume.
Yeah.
Because people have nowhere to go without doubling their interest rate. More than double probably, right? A lot of people have 2%, 2.5 or 3%. So now they're looking at 6 and 7.
The other interesting thing is I've been hearing that and I don't do many or any rentals, but I have been hearing that the rental market seems to be making a comeback,
It
and
is true.
which is
It
a
is
leading
true.
factor on housing in general.
I don't do a whole lot of rentals. Occasionally, I do one or two, but I can tell you the market is really hot right
More
now compared.
demand.
Oh yeah, so many phone calls and compared to last fall.
So, what do you think that is? Why?
Well, first of all, people are moving. Like beginning of the year, everyone wants to
Hmm.
move. More people need housing.
People
Uh,
going back to the office?
that too. That too. I'm trying to think. I think a lot of people are just have been waiting to upgrade
Hmm.
their housing situation. Everyone have been sitting on there for a long time. All of a sudden, they all need housing. And that's probably where I see more of the movement. Another thing happens is San Francisco market took a hit, probably bigger hit than the surrounding markets in the last couple of years. So it's actually cheaper and easier to live in the city now compared to Palo Alto or Mountain View or any of those areas.
Hmm.
So you see a lot of people actually moving back this way.
There's definitely people coming back and all of those things. There's also a lot of layoffs that are happening in the tech sector. So there's a
Yes,
lot of layoffs happening, but then there's also new companies that are coming in with the
correct.
AI business. There's a lot of that activity happening, but a lot of shuffling,
A lot of
a lot
shuffling,
of
yeah.
shuffling around in the tech industry.
Correct. I mean, that doesn't mean like we all of a sudden lose percentage of population. I don't see that at all. But a lot more movements.
Yeah, well, which could actually result in more real estate
Oh,
transactions.
absolutely. I mean, this year I would think we'll have more than last year. But that's what we think
Yeah.
right now based on where we stand. As far as the price, what do you think?
I think we'll see increases in price overall, maybe
Yeah,
4%, something like that,
some small
is my guess.
percentage.
I don't know, but that's my guess.
Yeah,
I don't think it's going to be anything outrageous. I
no.
don't think we're going to go down. This moment in time, that's kind of where I feel things are at. But I'll still be talking to all of my
Yeah,
buyer clients and giving the same message I always give, which is if you're in a situation where you might have to sell within the next 5 years,
yeah,
just be cautious
yeah.
because you never know.
You never know. I mean, that's life, right? You can plan. But I do think that in any market, there are always good deals and not so
Mhm.
good deals. You just need to be a little careful about that.
And evaluate the situation,
Right.
on a case by case basis, really looking at the property. And, as
Yeah.
we know, there's been so many things that have been happening with insurance, you
Right.
know, how updated is the house that you're getting? What are the new projects that you're going to have on the horizon once you get into that house? There's a lot of factors.
Many, many things. It's very complicated. It's such big decision, and that's why you need help. It's not so easy, but it's also about thinking a little long term. As Amanda said, it's not a impulsive decision. You definitely have to consider many elements before you make this move, right?
Absolutely. And if anybody has any questions about buying in San Francisco or selling in San Francisco, of course, Ing or I would be happy to answer any of those questions.
Absolutely. Just reach out to us. Now we are wrapping up the market segment. Feel free to just email us or call us. But we also want to add a little more about NAR
Right.
updates.
Little update on the
Uh-huh.
NAR settlement
Yes.
with what we've been seeing. And, we did a couple of segments on this when it first came out, then once it went into effect and kind of how that was all playing out. And I think really not much has changed
More
since
paperwork. More paperwork.
there's
Okay.
more and different paperwork. So as we were working through this whole process, right?
Yeah.
The California Association of Realtors, our brokerage, San Francisco Association of Realtors, all came out with forms as fast as they could to try to comply with everything. But because it was all happening so quickly, these have constantly changed, which, of course, has required us to be on our toes and understand the changes and keep up with everything. But You still need to have a buyer broker agreement. So when you're working with an agent to buy a property, before they show you a property, there needs to be a contract in place. And that can be, property specific, or it can be for any properties that you might be considering. And the longest that contract can be for is 3 months. So as we all know, it may take you more than 3 months to find your dream home. So every 3 months,
we'll send you another version of a contract.
Yeah. So you just need to update that. Not a huge deal, but just something to be aware of.
Yeah. But I also want to add is, as the NAR settlement happened, a lot of sellers were asking us, what does that mean? I don't need to pay the buyer's agent. Well, our advice has always been that if you want the highest net number, you can decide you pay or not pay or how much you pay. However, if you want your property to have the best exposure, potentially get a higher price, it might be advisable to pay the buyers.
Because you cast the widest net, because there are going to be some of those buyers in the buyer pool that just don't have the cash to come up to pay directly to their agent. So in that respect, it would benefit you as a seller to make that payment and then get the increase in the sales price. It all washes out.
Exactly. It's making the price.
Yeah. So I think ultimately, it's been a paradigm shift in a little bit, but things haven't changed that much in terms of the end result and how it actually works. So, but it is, you look at it a case by case basis and have your agent explain to you what the net number is that you get in the end, whatever payments are made out and whatever the purchase price is.
Yeah. I think, at the end of the day, it's more transparency, better transparency. And there's a lot more conversation we have with our buyers or sellers about this particular expense bucket. But it's really a shell game. Someone pays for it somewhere. Long term, things could change.
As is always the case in anything.
Anything will change. But so far, it's just really more paperwork for us, really.
Yeah.
And in many ways, it's probably a more solid relationship with our buyer clients. Would you say?
Yeah, and I think it helps to really, at first, it was all confusing. Nobody knew exactly. We're used to doing things in a certain way. And so it was a bit of a shakeup in that respect. But I do think that it has helped open up a lot of conversations and helped buyers to understand the worth of their agents a little bit more. Because for a long time, buyers, agents, not all of them, but a lot of them didn't even bother to explain their value so much but now they have to, right? Because if you're going to ask them to pay you directly, if the seller doesn't, you better be able to explain why you are valuable to them. So I think that's been a good thing to help buyers understand the value of the buyer's agent.
And it will change the industry. As Amanda mentioned at the beginning of the session, there's so many more realtors out there, and not all of them are qualified or even participating. So this change is going to just force a lot of reduction or
cleansing.
Cleansing effect of our industry. And the remaining ones, hopefully, are all competent, good agents.
Yeah. So, always ask questions. Make sure that whatever answers you're getting make sense to you, and ask more questions if you don't understand.
Yeah. Absolutely.
And if someone can't explain themselves to you, then that's a red flag.
Absolutely. Absolutely. All right. That's all for now.
Yeah.
And thank you so much for listening. We will see you next time.
Thank you so much. See you later.
Bye.